गुड इवनिंग एंड वेलकम बैक टू पैसा बोलता है। पैसा बोलता है में फिर से आपका स्वागत है। मैं आनंद श्रीनिवासन। आज मैं बात करने के जा रहा हूँ एक इम्पॉर्टेंट विषय के बारे में। ये इसलिए इम्पॉर्टेंट है क्योंकि ये भारत की एक्सपोर्ट्स को इम्पॉर्टेंट सपोर्ट देती है और बिना ये सेक्टर हमारा रुपया 100 के नीचे चला जा सकता था। मैं बात कर रहा हूँ सर्विसेज सेक्टर की। सर्विसेज सेक्टर की एक्सपोर्ट $322 बिलियन थी इस साल में और लगभग मर्चेंडाइज एक्सपोर्ट्स के आसपास आ चुका है। मर्चेंडाइज एक्सपोर्ट्स 440 या 450 बिलियन के पास है। अनऑफिशियल फिगर्स बोल रहे हैं $447 बिलियन है, तो लगभग $150 बिलियन की ही गैप है। व्हाट आई सेड इन हिंदी इज दैट आई एम गोइंग टू टॉक अबाउट अ वेरी इंपॉर्टेंट सेक्टर. दिस sector is services. Services primarily consists of software, and software has 322 billion dollars, including consulting and shipping. But software is the bulk of this business. Software exports, without which India's rupee would have gone well past 100 and we would have had an economic crisis. This is the importance of this sector. This sector contributes a lot to the Indian economy, and more than 10 million people work in it directly and indirectly. The IT companies are normally first of the block to declare results, and they declare results within the first 30 days, of which TCS and Infosys are the bellwether stocks, and the balance three big stocks, HCL, Wipro and Tech Mahindra, do declare it within 30 days. So the problem is not with the software companies. The problem is with what the analysts think and what the analysts expect. Let us look at the characteristics of all these companies. These companies are large, big companies with high gross profit margins and generate huge amounts of free cash flow, which allows these companies to keep investing money. These companies require very little debt. They basically hire engineers, train them in various applications, and rent them out to customers when they require. This is the services business. All of them have a very small consulting business. Infosys and TCS have a sliver of product business too. But primarily, these are services engineers. This is like a contractor having a mason, bricklayer, tile layer, and so forth, and lending them to building sites whenever there is a requirement. This is exactly what our software engineers do. But it is a very glamorous sector. People get to sit in IT officer, in AC offices, and work for 8 to 12 hours shift. This sector is the what drives the Indian stock markets too, because there is no corruption, there is no need to grease the hands of the government officials. Things happen normally and accounts are very clean, and therefore these sectors have high valuation. But here comes the problem. Since these sectors are owned by a lot of mutual funds and FIIs, these stocks vary up and down with the performances of the company. The analysts have great expectations of the company, and they think the companies have to eternally grow at paces of 25 to 30%, which is what startups grow at. But these companies have gone past the startup state and are mature companies which grow very slowly, and therefore they should be valued as stable cash cows instead of growth companies. But analysts being what they are, they keep viewing these companies as growth companies, and that is why we as retail investors get extraordinary opportunities to buy these stocks cheap whenever they disappoint the analysts. In the month of April, two companies have announced their results. First of the block was TCS, whose revenue grew around 16 to 17%, but year on year, net profits grew by 15%. But the problem was, quarter on quarter, it was a low single digit number. Immediately, all the analysts said, for TCS has disappointed the result. Disappointed. That is not true. Let us look at the ownership structure of TCS. TCS is 72% owned by the House of Tatas, a large chunk divided between FIIs and domestic institutional investors, and the public holding about 5 to 6%. It is very clear that Tatas are not going to sell their 72%, and therefore what is available to the market is only 28% of the stock. And therefore the market has no reason to be disappointed. The company has made nearly 50,000 crores profit in the entire year, and a substantial portion of that, more than 70% of it, is declared as dividend. Until taxation came on buybacks, the company was regularly buying back shares and has constantly endeavored to reduce the amount of equity it has. The company is largely debt free and there was nothing to be disappointed. But the market feels there's going big recession around in US and therefore the prices of the stock has corrected from 3,800 to around 3,150. There is nothing fundamentally wrong with TCS. These are good levels to buy, and if it corrects below 3,000, you can buy quite a bit. Now let's look at Infosys. Infosys is another company which has a good results. Its net profits has gone up by only 7.5 to 8%, not the heady double-digit quarter-on-quarter growth which the market expects. The market was so disappointed by the result that it has dumped that stock, and today as I speak, the stock is down 10%. There is no justification to cut the performance to dump the stock at 10% gain. The fall in Infosys is more exaggerated because the promoters own only 15% of the stock, and most of the free float in this company is much higher. Therefore, the fall is indeed very steep. But the company is strong. It has distributed 80% of its free cash flow and has a lot of cash on book. It has given a 50 rupee dividend and done a buyback by which it has reduced its stock by 1.41%. So it makes eminent sense to buy this company. And when I last recommended this stock, because of a problem with Salil Parekh, the stock was trading at 600 rupees or thereabouts. If you had bought it at that time 2 years back, today you will be making a 5% dividend yield. And even at these low prices, nearly 100% in margins. So whenever there is chance, there is blood on the street, we have to buy. Like Uncle Warren told us, we buy when others are fearful and sell when others are greedy. The market is fearful on TCS and Invoice, TCS and Infosys. This is time for us to buy. On the other three stocks, let's hold fire. I expect the results to be weak, and on the day the results are announced, we can jump in to buy. But this is India's most important sector and is not going to vanish. If the Mr. Market is fearful and gives it to you cheap, please go ahead and buy it. Thank you for watching Paisa Bolta hai. If you like this content, hit the like button of this video. Turn on the bell notification for the channel. If you do not turn on the bell notification, you will not be notified every time we put out a video. Kindly subscribe to my channel and send it to your friends and relatives and have them take a look. थैंक यू फॉर वॉचिंग पैसा बोलता है। पैसा बोलता है में आपका स्वागत है। मैं आनंद श्रीनिवासन। मैं सिंगापुर आ रहा हूँ 29 अप्रैल। सिंगापुर में हॉलिडे इन में एक इवेंट है। बहुत सारे हॉलिडे इन हैं सिंगापुर में। मेरा इवेंट हॉलिडे इन एट्रियम ANIHG होटल में है और उसका नंबर 317 आउटरैम रोड सिंगापुर 169075। Once again I tell you the address in English. It is 317 Outram Road, Singapore 169075, and the name of the hotel is Holiday Inn Atrium. I will see you in Singapore. Thank you for supporting Paisa Bolta hai.